Assalamualaikum warahmatullahi wabarakatuh and hi, my name is Nur Akila binti Cik. My text number 23.IB20F1004. So today my teammates and I will be presenting about our business project. The title is Credit Risk Comparison between Islamic Bank and Conventional Bank in Malaysia. Our supervisor name is Dr. Nur Azwar binti Ahmad Zulkifli. Next slide is my group members. So now, let's start with introduction. Our business project is about credit risk in Islamic Bank and Conventional Bank. Islamic banking in Malaysia began in September 1963 when Pemberanan Wang Simpanan Pembakar Bakal Haji PWSBH was established. The first Islamic bank in Malaysia was established in 1983. In 1993, commercial bank, merchant bank and finance companies were allowed to offer Islamic banking product and service under the Islamic Banking Scheme (IBS). These institutions, however, are required to separate the funds and activities of Islamic banking transaction from that of the conventional banking business to ensure that there will not be any commingling of funds. The list of banks in Malaysia offering Islamic products have grown to 60 banks. Apart from bank, other non-bank intermediaries offering Sharia-based product are Malaysia Building Society Berhad (MBSB) and cooperative registered under the Cooperative Commission of Malaysia (SKM). In Malaysia, the National Sharia Advisory Council originally set up Bank Negara Malaysia (BNM), advised BNM on the Sharia aspect of the operation of the institution as well as on their product and services. Otherwise, conventional banking system are much longer than Islamic banks. The conventional bank is based on full-fledged intermediary model that lends borrower to suppliers and then loans to companies or individuals. They provide marginal interest rate between loan rates and loans. They also provide banking service such as credit cards and guarantee. Conventional banks are prohibited from trading and their assets are heavily restricted to a small portion of their net worth. For conventional bank finance activities, they are mainly based on interest. Conventional bank essentially pay their customer if they pay more to the bank. However, their rental product require a more detailed explanation of the rental section. As a result, financial transactions from trusted bank are authorized by Sharia. However, transactions or service such as transfer, authorized service charge, etc. are contrary to the principle of Sharia. The list of conventional banks in Malaysia is 26 banks. Now we move on to the problem statement. Credit risk is a very important risk in banking system. It is normally defined as the probability of borrower in default a loan commitment in the banking system. Credit risk involves the inability or failure of one party to meet its obligation as agreed upon signing the contract. So credit risk exists in all products that the bank offer to the customer, and each bank have a different risk depending on the way they manage the risk. Credit risk is one of the main risks that seriously affect banks when financial crisis in 1997 happened. To fill in the gap, the study attempts to analyze credit risk determination among the 26 conventional banks and Islamic banks, 60 banks. So now we move on the objective of the business project. Our objective of this project, firstly, is to identify credit risk determinant in Islamic bank and conventional bank in Malaysia. Next, to identify correlation between credit risk and determinant variable. Third, to identify credit risk relationship between Islamic bank and conventional bank in Malaysia.
Assalamualaikum warahmatullahi wabarakatuh. My name is Izzatu Jannah binti Cik Kamarudin. My matrix number 23.IB20F1005. Next, I will continue to the scope of business project. The scope of research is focused on banks in Malaysia, which include Islamic banks and conventional banks, where Islamic bank has 16 banks in Malaysia, while conventional bank has 26 banks in Malaysia. Also, this study focuses on part of credit risk, size, ROA, and also leverage. Next is limitation. The limitation of the study is in terms of the allocated time to find the data of each bank in Malaysia. In addition to finding the data of each bank one by one, as many as 42 banks, we need to analyze one by one to find the financial statement in the annual report, referring to the data at Bank Negara Malaysia. We also find it difficult to find the value to make a calculation, such as the value of a non-performing loan and loan, because there are some bank financial statements that are not clear.
Next, for literature review, first we have a credit risk. According to Clistic and Cash in 2015, credit risk reflects the possibility of loss in the case of a failure of a business partner. This situation can be considered a failure to fulfill obligation under the terms of contract, which result in creditor's business. Focusing on managing risk, small Islamic banks tend to be more financially stable than small conventional banks. In contrast, large conventional banks are better than large Islamic banks, and unexpectedly, the small Islamic banks are financially stronger than the large Islamic one. In the meantime, Shihak and Hess in 2010 also argued that this situation may change because of credit risk management system are getting increasingly complicated in Islamic bank when working on a larger scale. In general, the Islamic bank have a different capital structure compared to the conventional bank.
Next, for the third proposal planning is leverage, uttered by Asna Chaibi and ZTV 2015. They said leverage is a capital structure is likely to affect credit risk. Highly leveraged capital leads to tendency to higher risk taking because of the need to produce higher returns with lower capital. Since financial risk increase with leverage, a positive relationship between a banking firm risk and leverage is expected. Lastly is size. Uttered by Moses et al. 2012, he said, under the too big to fail presumption, large bank takes excessive risk because market discipline is not imposed by their creditors, who expect government protection in the event of the bank failure. Next, Arthur Izribi and Boljelbena, 2011, they said such literature basis is analysed on the theoretical argument and of diversification by size. They said larger banks are more diversified and are likely to be more skilled in risk management, enabling them to deal more effectively with bad borrowers.
Next, I will continue to the methodology. Firstly is research design. We are using quantitative method research, which is we find financial statement every bank in Malaysia. Secondly, sampling design. We take data from Bank Negara Malaysia website about conventional bank and Islamic bank. They have 26 conventional banks and 16 Islamic banks, and we analyze about all population Islamic and conventional bank in Malaysia. Thirdly is data collection. Data from the income statement and balance sheet of 16 Islamic bank and 26 conventional banks from 2020. The banking annual reports are taken from the website each bank. We choose this period because it includes the financial crisis period because Malaysia has to face the main problem is COVID-19. First data is leverage, which is leverage as measured by total liability divided by total asset bank in year. Secondly is return on asset, which is return on asset measured as net income divided total asset. Thirdly is size, which is by natural log of total asset bank in year. Lastly is credit risk, which is measured by non-performing loan to total loan of bank in year. Lastly is data analysis. We have collected and analyzed all the data that has been collected into Microsoft Excel, and we analyze about descriptive, correlation analysis, and regression.
So next, the objective is to identify credit risk indeterminate in Islamic bank and conventional bank in Malaysia. Table 1, for descriptive statistic for the conventional bank, mean for the credit risk is 0.1722, and next, leverage 0.8143, return on asset 0.09, and for the size 10.3359.
Now I will continue for table 2. Table 2 presents the result of credit risk for descriptive statistic of the Islamic banks. Credit risk, which is derived by dividing non-performing loan with total asset, has a means of 0.549. Furthermore, leverage has a mean of 0.7829. Moreover, the return on asset has a mean of 0.096. Finally, size has a mean of 10.4837.
Next, I will continue with Table 3, Correlation Analysis for Conventional Bank. This table is answer to Objective 2, which is to identify correlation between credit risk and determinant variable. For credit risk and leverage, they have negative relationship, which is negative 0.2956. Based on rules of thumb here 2010, it shows that credit risk and leverage have a weak relationship because have value between negative 0.21 to negative 0.40. Next, for credit risk and ROA, they also have negative relationship, which is negative 0.0518. Based on rules of thumb, it shows very weak relationship between credit risk and ROA because have value between negative 0.20 to negative 0.01. And lastly, for credit risk and size, they also have negative relationship, which is negative 0.2490. Based on rule of thumb, it shows weak relationship between credit risk and size.
For table 4, correlation analysis for Islamic bank. First, credit risk and leverage. get a positive relationship which is 0.013 based on the rule of thumb by He et al. 2010 show that credit risk and leverage have very weak relationship because the value is between 0.20 to 0.01. Second, for credit risk and return on asset, got a negative relationship which is negative 0.2188 and based on the rule of thumb show that credit risk and return on asset have a weak relationship because the value is between negative 0.21 to negative 0.40. And last, for the relationship between credit risk and size, also got a negative relationship which is negative 0.0042 and based on the rule of thumb show that credit risk and size have a very weak relationship because the value is between negative 0.20 to negative 0.01. So, in the conclusion for table 3 and table 4, we can see that credit risk and the three of determinant variable have no relationship with the credit risk. As for the table 5, correlation analysis for Islamic bank and conventional bank. First, for the conventional bank, par value for the leverage get 0.3859 and next for the return on asset get 0.9780 and last for the size get 0.6444 and the significant level is more than 0.01. And for the Islamic bank, the par value for the leverage get 0.4053 and next for the return on asset get 0.2576 and size get 0.6460.
Next, I will continue to the recommendation. To the next researcher or the next student, we would like to suggest choosing a determinant more than 3 so that there is a significant result. As our group has done, we found that our determinant are only 3 things, namely ROA, size and leverage. We are confident that if we use more than 3 determinants, the results will be better. In addition, according to our research, we only study about credit risk in Islamic banks and conventional banks that happen in 1 year only. We also want to suggest that the next researcher or next student to conduct a data study in financial statement for more than 1 year. Our recommendation is to study the data according to a period of 5 until 10 years. This is because when more data is collected and studied, the result of the study will be more beautiful and better. We also would like to give a recommendation to the Polytechnic. We suggest the Polytechnic to extend the period of doing this final year business project. That is, the recommended period we want to give is between the 17 and 19 week because for us, the time given is quite short and overlaps with the final exam. We would also like to give a suggestion to the Polytechnic, which is to give students who do this final year project an opportunity to do a presentation outside the institution so that they can develop a more dedicated experience.
We finally reached to the last slide for the presentation. In a nutshell, after running this final year business project, we found that this business project is good for student and researcher. Student can learn a variety of knowledge including new knowledge. In addition, by doing this study, the student can learn how to analyze information using various applications and Excel. Last but not least, the student can also take the lead on matters that happen in the real world or real situation in the banking industry. We are grateful for being one of the students who was able to continue from start to finish in running this final year business project. We were able to see for ourselves the changes in credit risk in Islamic banking and conventional banks in Malaysia. That's all from us. Thank you for watching.